Hello everyone, welcome back to Just Invest Today. Netflix earnings just came out. I want to review it in this video. The stock is up around 7% because everyone's upbeat about the earnings release. But there's some news that came out that is so-so. There's a lot of red flags, there's some green flags. We're going to talk about it in this video. But before we do, like it and subscribe to my channel. I'm providing you guys with so much new content. So click that like button, click that subscribe button right now. So after hours, the stock is already up 7%. And guys, if you actually invested in Netflix during this huge drop back in May 10th, 2022, you're up around 80%, 77%, which is actually insane. So if anyone invested during that time, you are to be rewarded. Year to date, it's up 7%, which is pretty good. The main reason why Netflix is up 7% is because the subscriber growth surprised a lot of people. They're aiming for like 4 million new subscribers, but they beat that. They killed that out the park. They were up 7.6 million net new subscribers compared to the 4.5 million the company had projected. Remember, Netflix is all about subscriber growth, and that's how it kind of made its mark. The revenue growth, the subscriber growth, and that's what a lot of people were banking on when they bought Netflix back in the day, because it didn't have to generate any profit or any free cash flow, because that's what people were banking on. They're going to produce that into the future. So now that Netflix is a mature company, they're not going to grow as fast. Everyone knows that. Now they have to focus on the free cash flow. But is the free cash flow good enough for you to buy the stock? Netflix is selling for $140 billion with $1.6 billion of free cash flow. So it's lower than a 1% yield. So that doesn't seem attractive to me at this price, but who knows if they can continue the growth into the future. Quarter over quarter, it was a $3.2 million subscriber beat, which is actually pretty insane, but revenue was only up 2%. So it was kind of in line. Operating margins were actually 7%, which was down from the 8%. Earnings missed. Earnings per share missed, which is kind of so-so because that can their EPS kind of comes and goes, so I don't really look at that too hard. And they generated around $1.6 billion in free cash flow, which is pretty good, but they still have $500 million plus of stock-based compensation. So that kind of goes down to like a $1.1, $1.2 billion free cash flow range, in my opinion. That's how I see it. So overall, right now, if you're going to buy the company and it's not going to generate as much revenue as it was before, do you think it's worth it at this price? That has to be the main argument when you're thinking about Netflix, because I'm not seeing Netflix as this crazy grower anymore. It's more established. They got to focus on the free cash flow generation. Do you think that Netflix projected free cash flow is going to be predictable? Because that's what we want to see, some predictable free cash flow growth, not some up and down and we don't know what's going to happen, because that's what they've been doing in the past. If you look at the cash flow generation from Netflix from previous years, it's been all over the place, because think about it. In 2017, 18, 19, they weren't generating any cash. 2020, they picked it up. 2021, it went back down. It went back up to $1.1 billion in 2022. So how is it going to turn out in 2023? And they are actually projecting for like $3 billion in free cash flow generation. But with Netflix, we just don't know, because it's all about the content that they produce. So if they're not going to produce good content, why do you think that they're just going to have this crazy subscriber growth? Because it's on a hamster wheel, Netflix, in my opinion. Because if they're not spending, and we know that they have to keep increasing spending, they're building out huge studios for Netflix, spending $800+ million on new studios to still make sure they're producing great content, which I actually believe in. And that's what I really truly love about Netflix, is that their moat is always going to be pretty solid. The moat of Netflix is always going to be solid, because the first thing you think about when you're thinking about going online to watch a movie is Netflix. And I have to appreciate that, because they did come up with good content. The Glass Onion, Trolls, All Quiet on the Western Front, My Name is Vendetta, and Wednesday. So that is all supplying subscriber momentum and people kind of sharing that with their friends. And people coming back to Netflix, and now they're doing ads, which we don't know how that's going to turn out and if that's going to actually produce the revenue that Netflix wants to see. So I still believe that the moat is still there for Netflix as being the best content producer. And if you believe in that content producing machine of Netflix, I see this as a good company. I'm not sure at this price. I think I would wait until it goes down, because It has to continue to prove that it can produce free cash flow because we know that it's not predictable. If you believe the CEO's projections of the free cash flow, I don't think you can really project that. Depending on the content, what they produce, if people are still liking the content, like there's a lot of things that kind of have to work in Netflix's favor for that cash flow to kind of continue. Because what if they need a lot of new content? Content is only getting higher and the competition is still building. So you still need to produce that content and people are gonna want more money. So you just can't really predict that free cash flow growth accurately, especially with Netflix's history. We know it's all over the place like crazy. But a big red flag was Reed Hastings actually kind of stepping down. He's still going into an executive chairman role. So it's not that big of a red flag because he's been talking about stepping down. So it's not that huge, but it's still something to kind of keep your eyes open about. So there you have it for Netflix. I think Netflix is a strong company. In my opinion, I would actually be more of a trader of Netflix stock because if I trade Netflix stock, say it goes up, I can make my profit quick. If it goes down, I'm still willing to hold the company because I still think it has a strong moat, so I wouldn't be too worried about that. But in my opinion, I don't want to hold Netflix long term because I just don't know if they can turn around the business. Plus, I know they're projecting out all this free cash flow growth. I don't really believe what they're saying when they're saying, oh, we're going to generate 3 billion because the content spend is going to be the content spend. They have to keep that up. You just don't know because Netflix has proven over and over again that their free cash flow is all over the place, depending on the year, depending on the month. Like different months have different content spend and we just don't know where that's going to end up. So I can't say confidently that they're going to generate $3 billion in free cash flow, in my opinion, for 2023. So that's why I think this is more of a trade. So there you have it for Netflix, guys. What do you think about Netflix? Are you buying the company? Are you selling it? Are you just holding it? What is your opinion on Netflix, guys? Like this video and subscribe to my channel.